All right, we should be live.
All right.
Hello,
Awesome.
everybody. My name is Dan Parker. I'm a real estate agent here in San Diego, if you don't know me. And I have my friend Jeb Smith joining me from Orange County, who's been in real estate just about 20 years now.
About 20 years. Yeah. Part of that was on the mortgage side. And for actually a good portion of that was on the mortgage side, also doing real estate during the same time. And then I got smart and eliminated the financing piece
Yep.
about 10 years ago, and just been doing real estate since then.
Awesome. And you have a very successful YouTube channel where you talk a lot about the real estate market, buying and selling homes. So you are the perfect person to have on today, where we are talking about when housing prices are going to come back down to reality. And I use that term specifically because it's something that we hear all the time, right? Like prices have shot up like crazy. It seems like at some point it has to come back down. So we're going to talk about all the reasons why that may or may not be the case in the coming years, and kind of speculate as to what we think is going to happen in the market.
No, absolutely. I hope to come away with some insight that I can share with clients.
Yeah, absolutely. And
It's
so
all
for
good.
anybody watching, whether it's Facebook, YouTube, live, not live, the only thing we ask from you guys is just let us know what's going on. Give us your questions, comments, whatever you think is happening. We want to hear it. So if you could start off, just let us know where you guys are watching from, and we'll get started with the content.
Awesome.
So Jeb, let's just make this really easy. We'll make this the shortest live ever. When are housing prices going to come back down to reality? One sentence answer.
When supply exceeds demand.
Okay. All right.
That's
that
it.
was easy.
All right. See you guys. No, I mean, honestly, that is the real answer. It's the answer that no one wants to hear, but it is the simple answer to the problem, right? I mean, the problem is a lack of inventory. Interest rates are a problem. I mean, a problem because they continue to push prices up in a time where inventory was already low, right? But now that interest rates are rising, inventory is still not going anywhere, at least here locally. Every week I do a live at least once a week. And we talk every week. I started off by talking about what the inventory is here in Orange County, right? Just north of you guys. And, at the start of the year, in fact, at the end of the year, we ended at just over 900 homes. 900 homes, 3.3 million people. That is next to nothing. You might as well not have any homes. And I'm talking condos.
What was it last
townhomes.
year? Like last December.
Year, I don't know where it ended, but I do know that in 2021, the start of the year, we had about 2,500 homes on the market. This year, we started with, as of today, we have 1,086, I believe.
Yep.
So, I mean, we have about 40% of what we had last year. So 60% less inventory at the moment from the same point last year. And so that's the problem, is that there's no property. And so that's where the overbidding, the craziness it comes from, is just because people are panicking. The rates are going to go higher. People are panicking that they can't, they're not going to get an opportunity to buy a house. And so that's where you see some of these egregious offers. And you also see it on the seller side. Sellers are egregious too. I mean, I have clients, they're egregious. They're greedy people because they know what the market's doing. But can you fault it? No. I mean, because there's multiple people willing to pay it. It's not just one person. It's multiple people that are willing to do it. So,
especially if they have to go back around and buy a house themselves. They know they're getting right back into the market.
And that's the thing, is a couple of my clients don't, right? They have real estate and they're like, hey, you know what? I don't have to sell. It's a good place to be.
Yeah.
And that's where you want to be ultimately, is where, you know what, if somebody's willing to pay it, then great. And that's the thing, is some of these, I've been wrong more than a handful of times in the last year on what I thought a property was worth on both sides, helping buyers and helping sellers, right? Sellers say, hey, what's my house worth? It's worth 2.3, 2.3 million. I want to list it at 2.5. Okay. 2 offers within 24 hours at 2.5. Okay. You were right. That people are willing to do that. And then it also works on the buyer side. I mean, I say at the moment, that is the toughest part as a real estate agent, at least I feel like it is telling a client what a house will likely sell for. Because I've come to the point now where I'm looking at real estate as a real estate agent and saying, that just seems crazy to me, the price that they're asking for that house. And my client's saying, hey, I want to offer 50 or 100 grand above it. And I'm looking at the comps going, dude, you're you're already 75,000 above where it was 3 months ago, 4 months
Hmm.
ago. And so it's really hard for me as an agent to go, yeah, let's write that offer at another $75,000 over the asking price. Even though they're willing to do it, just feels like something as a real estate agent. I don't know. It's that balance that I've never had to deal with in my career is, calming people down a little bit and just kind of letting reality set in. But at the end of the day, they're the ones driving, that they make the decisions. I just kind of follow suit in what they want to do. I give advice, follow it or not, and that's where things end up.
Yeah, it's tough for us as agents when you genuinely care about the people that you're working with, and they're not just numbers, right? Like
No, that's it.
when
I mean,
they ask those types of questions, it's like, yes, I can tell you what the strategic offer would be, but if you want to get this house and get this offer accepted, it's not a strategic offer. It's like an emotional offer at that point. It's kind of what you have to do in a lot of situations to get an offer accepted, especially in this market we're in right now, which we're definitely gonna talk about. Um, so we're talking about like supply and demand. It comes down to supply and demand. That makes a lot of sense. What people say a lot is, you know what, this has happened before. Markets go up, markets go down. We've had this crazy long run of a market going up, so it has to come down at some point. And there are a lot of like national and global things that we can look at that could potentially be a catalyst. You have interest rates going up. You have inflation at 7% last year, which we can talk about. You have supply chain issues. I'm just curious what your thoughts are on how those types of things can impact the housing market.
so a couple of weeks ago, I talked about this on video, like I do, I guess, everything at this point, right? And so we go back and we look at the last, say, big four, Fed chairmen that have had to deal with inflation, right? You go all the way back to the days of Arthur Burns when he basically let inflation run wild, and then his predecessor came in the early '80s, and what happened was he started to raise the Fed funds rate. And I don't remember exactly where we were at that time. I've talked about it on video, but I don't remember the actual numbers. But essentially, he hiked the Fed funds rate up considerably. And what happened was interest rates ended up coming back down. Got inflation under control, rates came back down. But the problem was 2 years later, you kind of saw recession, right? And then you take days of Greenspan late '90s comes in, similar thing, hikes the Fed funds rate because inflation's out of control. Guess what happens? Interest rates come back down. Recession 2 years later. Well, we're in a similar situation at the moment. Inflation's out of control. They're going to start to hike the Fed funds rate, which is going to limit the supply of money flowing through the economy. For those out there that don't understand what the Fed funds rate is, it's the rate at which banks borrow money from one another. It's not interest rates. Fed funds rate is not interest rates, right? And so in this case, if they do decide to raise the Fed funds rate, which they are going to, the question is how many times are they going to raise it? How, this year, when's it going to start? There's a lot of unknowns at the moment. And that's the problem with the market, right? Is that the market is irrational because they don't have any confirmation as to what's going to happen. So you've seen these crazy moves in bond prices over the last couple of, weeks, 2 weeks or so, just because there's uncertainty in the markets. Nobody knows is the Fed going to start in March? Are they going to start in May? Are they going to raise it 3 times? Are they going to raise it 7 times? All of these different factors playing into it. But I do believe once the Fed starts to raise the Fed funds rate, you're going to see interest rates come back down. But I think that's probably going to lead to a recession in a couple of years. But at the same time, I think when that happening, when they start to raise the Fed funds rate, traditionally what's happened is the stock market's taken a hit. I think you might see some of that. I think you're going to see money being pulled out of equities. I already see it with some of my clients personally, is they're pulling money out of stocks, volatile, moving assets, putting them into more fixed assets, right? Because one, it's a hedge against inflation. Two, there's some certainty as to, what's going to happen. And so I think you're going to start to see more of that if the Fed truly does act and start to raise the Fed funds rate. So I don't, but I don't know how that impacts supply. That's the real question, is how does this impact supply? I don't know. I think there's a couple of thoughts on it. I mean, one for me, a lot of people over the last couple of years have been able to refinance and take advantage of a really low interest rate, right? So are you really going to want to sell that property and buy something that's now more expensive and at a higher rate potentially? That means your payment's there's a double whammy there with regards to your payment. Or you're going to hold on to that and probably keep that inventory off the market, which again keeps supply low. I mean, we all know what the rental market's doing. I'm sure San Diego's a lot like Orange County, and in the sense that it's as crazy as the housing market.
Yeah.
People overbidding, multiple, offers, so to speak, on every listing. So I don't know the answer. I just know nothing can change until something changes. And as crazy as that sounds, we are very much following what we saw last year with regards to the direction of housing at the moment.
Man, a lot to unpack there. It sounds like we might be getting some feedback on your side. I know you have some backup headphones you might be able to put in over there, Jeb.
Okay, yeah,
are
are
we
we?
go into it?
All right, yeah, let's do that.
Yeah, and the other thing I kind of want to ask you, since you've been in real estate for so long, is how does this differ for what you were seeing 2008, 2009?
So I'm going to put these in real quick here and
Yep.
hopefully correct this problem. Let's see what we got. Let me change this real quick. Sorry. All right, how are we now?
Sounds good to me.
Okay, perfect. All right. Actually, you sound a lot better like this too, so that's great.
That's good. That's helpful.
I mean, back in that day, what we had was we had way more supply than we had demand, right? There were so many factors playing into that market at the time, right? The biggest problem was loans, and it's not. I mean, the fraud and all of that thing was one deal with regards to loans, but what you had more so than anything else is you had loans adjusting. Short term ARMs, 2 and 3 year loans that were a lot of more interest only, some were neg AMs. And so what you had is those loans coming to fruition, ending that 2 to 3 year period, and those loans going, either from an interest only to a fully amortizing payment, or from a neg AM to a fully amortizing payment. And at the same time, values had decreased because there was so much supply on the market. So now you got people that maybe want to refinance, can't refinance because the values are down, or that the programs that they were able to initially get into the loan with, some of these no income, no asset, or stated income products, were gone. And so there were just so many different factors playing into it. That time we had 12 and a half months supply. Right now we have less than a month. I mean, there's no comparison with regards to the supply during that time versus now. And now you've got the majority of people putting down payments. There's just so many different things driving this market that were different in that environment.
Yeah, I heard I forget exactly where I heard it, but I heard someone say in 2008, 2009, we had the greatest oversupply of inventory in history. And now we have the greatest undersupply of inventory in history. And it literally, I mean, we can pull up some statistics, and I think it would make sense. Let's get a little bit local and talk about our local markets. But I can show you here in San Diego. So this is the number of active listings over since 2016. Probably peaks at around 12,000. And keep in mind, this whole time it's a seller's market. It's a seller's market. It just depends how much of a seller's market it is. Right. Last December, we had 4,000 homes available. 2 Decembers ago, December 2020, we had 4,000 homes available, San Diego County. And now we have this December, we had 1,900 homes available. And like you said, Orange County, San Diego, about the same size. We have around 3.5 million in San Diego County. And I remember there was a study done that basically said over the last decade, there has been three times the population growth in San Diego as compared to the amount of new homes being built. And when you, or not in San Diego, in all of California. And they basically said that we would need somewhere around 3.5 million new homes in California by 2025 to be able to meet up with demand. And I don't know if you know what the statistics are for Orange County, but I can tell you in San Diego, we're building around 10,000 homes a year when we really need about 350,000 new homes. I mean, it's nowhere near sufficient for what we need. And that's a
Yeah.
problem.
No, it definitely is. I mean, the thing about San Diego County is that I feel like San Diego County as a whole, I mean, I'm not looking at a map, is larger in square footage than Orange County, right? Orange County,
Yeah.
there's just nowhere to build. I mean, yeah, you can do these infill communities, you're building 50 homes or 20 homes or something or maybe even smaller, some subdivisions even smaller than that, but you can't go out and build a community of 1,000 homes. There's just nowhere to do it. And that's really the problem here locally. Now there's other areas of the country that obviously don't have that problem. Because they have land and what have you. But, I saw something the other day. I read an article in the Wall Street Journal that they're finishing these homes. I think it was up in like San Jose or somewhere. And they can't even get garage doors. They can't get garage door openers to actually get the certificate of occupancy to close these. The county is actually issuing a temporary just so the buyer can close on the property. And there's like a false garage door. There's like a piece of wood there until something comes in. So the supply is also a problem. I mean, that's something we haven't even addressed. Yeah. And that's something that's likely not going to get better for some time, just because of how bottlenecked it is. I mean, you got different variants. You got people. I mean, I'll tell you a story. I had a tire leak, right? Tires just leaking air, nothing. I could drive it, but I had to fill it up like once a day. And so just bought the tires maybe 3 months ago. So I went, it took me 8 different places to go to find somebody that had enough workers that could actually take 10 minutes and patch the tire. I was like mind boggled through the whole thing, that I went to places and people like, we don't even have a tire tech. Like, what do you mean you don't have we don't have somebody that fixes patches and tires? I'm like, okay, so what do the other people do? Oh, they just put them on. Okay, so those people can't do that job? No, we hire specific people for this. Okay, that's great. But they basically said nobody wants to work. And so there's just so many different factors playing into these whole bottleneck things, plus the variants and all this stuff, that I just don't see how it's going to correct itself anytime soon.
What's really eye-opening is we had driven through Long Beach about a month ago, which is if I'm not mistaken, like the biggest port for all of California, if not, well, I think top 2 at least. And guys, it's crazy. I mean, hundreds of ships off the coast. We've all heard that. But to see the amount of storage containers that are stacked up and stacked up and stacked up, to just fathom that it takes 1 truck per each of those shipping containers to get out of the docks. I mean, there's no wonder why there's such a shortage on things. I can't even imagine being able to clear all those out of there. It's never ending. It's like an apocalypse type of scenario when you're driving through it. It was, I couldn't believe it. I'm sure.
Yeah, and actually here in Huntington, where we're located, so we're on the beach, right? We can see the ocean. And for the longest time, you could see, I mean, hundreds of these. I mean, I say hundreds. It was like, I think at the most, visually you could see was like 40 something, but it seemed like they went forever. But now they've actually come out and changed the guidelines, so to speak, to where these guys can park. Now they have to park like so far off the coast. They've actually told the ships to slow how their time frames in how quickly they come to Long Beach, just because visually they don't want the ship sitting there, because it looks bad that all these ships are just sitting at port. But secondly, there's just they don't have the manpower to take them off. It's not just the people driving the ships, it's also the people unloading the goods. It's the people, there's just, again, it's a lack of people working for one reason or another, but yet unemployment's down to below 5%. So it's one of these weird things that, during COVID, people, maybe at that retirement age had the opportunity to just say, you know what, I'm not doing this anymore. Or they've gone out and explored different careers for whatever reason.
It's going to be really interesting, like 5-10 years from now, looking back and having like all the data as to what's going on during this time.
Yeah, no, it's crazy, man.
We can sit here and speculate, and we can see all these things that are happening, but I'm sure there's a lot that's happening that we don't even have our eyes on, which is crazy. But let's talk about what it's like today buying a home versus even 2 months ago. What are you seeing in Orange County right now?
Yeah, honestly, a lot of what I saw in the spring of last year.
Yeah.
And I wouldn't say it's scary. It's almost it's concerning to me to some degree, right? I mean, people getting appreciation in their homes, it's great. I'm a homeowner, whatever. It's great to have appreciation, but to see record appreciation is not something you want to see, because sustainability wise, it becomes a bigger issue. Affordability becomes an issue. There's just so many things that play off of it. But the last 3 offers I've written have sold 8% higher than where they were listed. And we're in the first 2 weeks of January. I mean, these are all properties that have been written this year. Listings that I've had that have gone into escrow since the beginning of the year have gone, 5% or so above the asking price. So, and some of these were priced high, as I mentioned earlier. So you take, the 5% that they went above the asking price plus where we were priced initially. It's again, it's a bit concerning, and it's tough for buyers out there. It's like I said, it's the toughest thing for us to do as agents is give you an idea of where something's going to sell. It's, in this, we talked earlier, one of my mentors, Brian Buffini, he's down in your market. One of his sayings that I often use is people buy emotionally and justify logically. That has never been truer in the real estate community than right now, is that there's so much emotion in the market. And that, people, once they get it accepted, they start questioning, okay, did I do the right thing? Did I make the right offer? I have people asking that question all the time. And it's just, what you have to do in this market if you want to get into a house. And it's not because, I mean, there are multiple people willing to do it. And that's the thing, is that if you're not going to do it, somebody else is. And so you've got to decide if it's going to be you or not.
Yeah, I had a client send me a property that he was interested in today in San Diego, in North San Diego, and not even an area that like you think of as being high, a high priced area. The property is listed at 1.4 million. It was new construction that was purchased less than 2 years ago for $700,000.
Wow.
And I'm not saying that we're seeing 50% increase from 2 years ago. I think there are a couple of things specifically with this that make a lot of sense, some upgrades, things like that as well. But yeah, it seemed like last year it was like the toughest market I've ever worked in at the beginning of the year, the first couple of months up until June. And then it seemed like, all right, things are finally starting to calm down a little bit. Like I'm getting a quarter of my offers accepted under asking price. Like, ooh, that's amazing. Some nice properties are sitting on the market for 2 weeks. Wow, 2 weeks. That's incredible. And then inventory just really took a nosedive November, December. And then starting this year, it's like, man, it seems like you have to account for 100 to 200,000 over asking for some of these offers to get accepted or even considered, or maybe even not get considered, maybe even not get a response, going like crazy amount over asking. So this is a tough market. It's really challenging right now. And what's crazy to me, Jeb, is like, interest rates are starting to go up right now. So
Mhm.
shouldn't that mean that there's less demand? But I feel like we're in this situation where people know that there's going to be more spikes in the interest rates. So they're trying to get in early, even though they're already starting to go up. Do you think that is a possibility?
Yeah, no, I definitely think it is. I mean, I do think rates are going to come back down. I have mentioned that many times. Now, is that 3 months from now? Is it 6 months, or is it a year? I don't know, but I do think there's going to be a pullback in rates, and I think personally, I think we're towards the ceiling of where rates are going to go. I that's my 2 cents. Now, it may not mean anything, and it could very well be wrong, but that's just what I feel based on the data and reading charts and so on and so forth. So, with that said, I agree 100%. I think people truly do believe that rates are going to go higher, right? There's a big mix in buyers and sellers that half believe that the market's completely fine and that you're going to see, growth and continued appreciation, and the other half thinks there's a crash coming, and you can, and then you got rates. Half believe that rates are going to go up. The other half don't believe so. It's hard to say the direction, but I think there's a fear out there that, again, house prices are going to go up. People are finally starting to understand supply and demand and how that's not really going to change. But they're really seeing rates go up. And so, I mean, in fact, I have a buyer, a seller rather, that we just went into escrow, and this is a $2 million plus property. They got approved for a property back in December, and their interest rate was 2.5%. Today, it was 4.125% for that same loan. Now, fortunately, they had a good relationship with the bank, and the bank made an exception, and so on and so forth. But I mean, look at the difference there. I mean, we're talking, a 1.5 or so higher than where it was. We're talking a big loan here. So that's a lot of money.
Yeah.
And so that is going to affect things. No question, unless you see some pullback. Some people are going to get priced out. They're going to meet that threshold, so to speak. Some people are just going to say, you know what, I'm not willing to do it at that price. I mean, you're going to have a mix of a couple of things, but I think that will affect demand. The question is the supply going to build fast enough? I mean, it's not like no homes are coming on the market. There's still homes, but they're just going into escrow, right? I mean, yesterday during my live, we had 69 in Huntington Beach. Today we have 76. So that's 10% essentially increase in inventory. The real question is, what does inventory look like next Wednesday when I do my live again? Right? Because that's what I measured off of. Every Wednesday I can say, okay, this is where we were last week. This is where we are this week. And so there's, if you look at it daily, you'll drive yourself crazy. But if you can look at it weekly, you get a really good idea of what the market's doing.
Let's get some comments in here. Jeremy Knight is very active in the comment section today. It's nice to see you, Jeremy Knight. Al Bundy here because Jeb promoted this live. Also, just subscribe to Dan. All right, Jeb, we can end it now because I got a subscriber.
Awesome,
really good about that. I'm trying to reach your 45,000 plus subscribers.
You should get them. We'll have you on.
All right, Al. I sold my house. Yes, I am in Encinitas now, and life is good over by the beach, living my best life here in San Diego. Melissa, you're in San Diego and feel this. You were just positioning yourselves to buy early 2020. Nah, man, I'm not gonna laugh out loud. That's tough. We've been trying to figure out how to pivot ever since, and that actually leads me into my next point, Jeb. Who are these crazy people that can afford these homes right now? Who are you working with that can actually afford a home in Orange County?
A variety, right? I mean, I just had a couple that I helped buy property. They're actually friends. And he's a pastor and she's a nurse, like a emergency room nurse. And so she does well financially. He does. I don't know what he makes, but I mean, as a pastor, I'm sure there's a ceiling on that. But they were able to buy. They got a gift of $100,000 to help with their down payment from parents. It's like an early inheritance, if you will, right? They know that they're going to give the money to their kids at some point. They're giving it to them now to help them get into property. So the down payment came from them, and they were able to buy. On the other side, I have a doctor, right? At the now, he's buying a $2 million plus. So it's a big variety of clients in different places in life. But I have seen a lot of clients, that I'm working with that have kids. They're pulling money out of property. They have the money in the bank and they're helping their kids get into real estate. Grandparents giving early, taking money out of trust and stuff and passing it along now just because they see the direction of things. And they're like, you know what? I want to see my grandkids enjoy it now. Like I'm going to die and never get to see them use the money. Why not use it for something that they can get into and actually gain some equity and, maybe build some long-term wealth and all of that. So it's just a lot of different places. I mean, I have millennials that I helped last year and I had, seniors, boomers, if you will, that were buying property.
I'm getting a lot of relocations, definitely from the Bay Area, LA, Seattle, Washington, DC, New York. I'm also getting a lot of people that this isn't their first home. So maybe they're pulling equity from another house that they're selling. First time buyer here in San Diego, when you don't have these extra resources, it's tough. And it just I don't even, like you were saying, it's hard to tell your clients what to do. I don't, for first time buyers, there's just nothing out there. There's not enough inventory. I mean, I think, and especially so many people want a single family home, which is understandable, but I think we're getting to this situation where it's going to be, you just might have to get into a condo or townhome to get your foot in the door so that you can ratchet up to the next property, build some equity in that, and eventually move into another home. But the problem is that there just aren't that many condos. I mean, I'll pull up I'll pull up a stat here. So this is the information. This is market data for San Diego.
And I could pull up the same thing for Orange County too.
Cool. All right. Yeah. And I'm not sure if you can share your screen on your end, but we can figure that out. So for San Diego County, and this is going from December of 2021 versus December 2020. As we said, inventory is really low. So inventory of homes for sale for single family homes was 2,800. For single family homes, this last December was 1,200. So a decrease of 57%. But what gets really crazy here, Jeb, and I was just noticing this before I came on with you, and I'd love to see if you could help me try and analyze this. But the inventory for attached properties went from 1,300 to 300.
Wow. I mean,
so it decreases 74%.
And I think that's because there's probably a lack of detached options out there. So people are taking what they can get. There's usually more of a supply of condos typically than, because there's more of them, right? And they're usually a lower price point than traditionally than single family homes. So you got more options out there. I don't think, can I share? Let's see here.
Do you have a button for it?
I do. Let's see here. Share screen. Oh yeah. Let's see. What do we got here?
I'm not seeing it on my end.
Hold on.
Oh, there we go. There we go.
Yeah. So here's Orange County, right?
Now.
So Orange County, we can talk the same numbers. So inventory of homes, you went from what, December 2020, 1610, December 2021, 810, 50% drop. Yours was 50 something percent, 56%. But if you go down again, inventory of homes for sale, 2020 for detached. Okay, yours was detached at the bottom.
No, mine was attached property on the bottom.
Okay, so mine's opposite than yours.
Oh, interesting. Okay.
Yeah, so 1610 down to 1810, so a 50% drop, and then we went from a detached 2,500 to what? Just over 1,100, so a 56% drop. So pretty similar. You saw 56. This is 56. The increase up top's a little bit different, but I mean, you can see the data there. It's just, again, it's days on market. I mean, month supply 0.7, 0.6. I think you were at 0.62 on detached. So it looks very similar to San Diego.
So what do you? All right. So we've done analysis of the overall market in the U.S. We've done analysis of the local market, what's happening right now. What do you see happening over the next 6, 12, 18 months?
Good question. I believe that the spring is going to be, I still think even with rates doing what they're doing now, I hope that you've seen the highest of what rates are going to do. So I think buyers are going to continue to do what they've been doing as long as they haven't been truly affected by what's happened in rates, right? I did a survey recently. About half of the people said that rates weren't going to affect them. And there was a couple thousand people that had gone through the survey. But with that said, I think, as the spring passes, it really depends on what happens to inventory. There are some people out there that predict that by September, August, you're going to have 4,000 or 5,000 homes on the market here in Orange County. I don't believe that. I don't think.
Where are they coming from?
That's why I disagree. I think last year we peaked in Orange County, 2,700 homes on the market, 2,700 and something, some change. So let's call it 2,700. I would be really surprised if you went much over that for the highest level that we'll see this year. So I think you're going to see a market similar to last year. I think you're going to see less sales than you did last year, but I think it's going to be not because of, willing buyers, right? There's willing and able buyers. We talk about this on my channel all the time, that you and I are willing to go live in La Jolla on the sand. We would love to do that, right? But we're not able to do that. There's a lot of people out there that want real estate that would love to own a home, but just can't for one reason or another. So I think that because of where prices are going, you're going to have some people priced out, so that the number of sales is going to go down because of that. I just don't see inventory really changing very much. So I think you're going to have a year similar to last year, probably just with less appreciation. So I think, still tough to be a buyer, still going to be in multiple offer situations, still going to have to make competitive offers. But I think after the spring, you'll probably see it slow down, kind of like you did this year, right? Summer comes along, people start saying, you know what, I just need a break. I'm not going to look for homes, kids or vacations, whatever. I think you see a little bit of that slowdown, and hopefully you don't see what you saw last fall, which is, the market continue to kind of pick up steam where it left off in the spring, because that's what happened here. So I know I'm saying I think a lot, just because I truly don't know. I don't know what to expect. I think I expected us to have more inventory on the market right now than we have,
Mhm.
even though this is traditionally not when inventory picks up. It doesn't really start to pick up until about 2 weeks from now.
Yeah.
Really, I expected more people to, just based on the conversations I was having, to just come to the market with their homes. But I think there's a big group of those people that are saying, you know what, I am a seller, but I've got to be able to find something to buy.
Mhm.
And until I find something to buy, I'm not willing to put my house on the market. And so there's that catch in how this whole thing plays out, is that if somebody can't find the house that they want to buy and they're not willing to sell until something comes on the market, you got this problem, so to speak. And so that's where they're at. And a lot of those people have interest rates down in the 2% range now.
Yeah.
And if we're looking at rates in the high threes, there's a big difference.
Yeah, I agree. I have a listing appointment with a very good friend who I helped buy a house a year and a half ago this weekend. And, I'm going to be real with them. Hey, you need to sell and buy at the same time. That is going to be very tough right now. And, I'm not going to sugarcoat it. And the more that the market is the way it is right now, the more the consumers start to understand the way the market is right now, the fewer sellers are going to have that don't need to sell. Because just like you were saying, if they have to buy too and it's near impossible to buy at this moment, then they're going to hold off a little bit. So I think
Yeah.
there's no doubt the next couple months it's
I
going to
think
be spicy.
I
It's
think
going to,
as a buyer, if you can be flexible on your timing, like if you, for example, there's a house here in Huntington Beach that the showing start tomorrow. My wife and I are going to look at it. They are selling it with the idea that they have to find a replacement property. So it's going to be a contingent deal. I'm okay with that, right? I'm okay if you want to take 6 months to find a house. If we
yeah,
can lock in the price now, I don't care. Like let's do the deal, and you take as much time as you need to find the property. I think if you're flexible on that side, and that deal could never work out, right? It might not work out because they might not find a replacement property. But I think
sure.
if you can come in with the mindset that, hey, listen, you know what? I can be flexible on my timing. I don't need this today. I'm okay if it doesn't work out. There might be some opportunities, because there are going to be people that put their homes on the market that are contingent. But once they go into escrow, once they accept an offer, then they're in a much better position to make that next transition, so to speak, when the property does come up that they want to purchase. So it's, there's a balance there, and for buyers that don't own real estate, it's tough. I get it.
Yeah.
It's again, that for me is concerning.
Yeah, I agree. It's unfortunately not coming back down to reality anytime soon. I don't believe. I would say I think near the kind of like you were saying, maybe halfway through summer, things will start cooling down a little bit. I thought things were starting to cool down second half of the last year. And I didn't think prices were going to come down this year. I figured they would at least continue at the same rate as inflation. But it seems like they're going to get they're going to get above that throughout the course of the year, at least from my perspective.
Yeah, I agree. It's, I think once you get, again, this isn't not going to affect the supply, so to speak, but I think once you get some certainty from the Fed in the direction that they're going to, the language that they put out
Yeah,
as to how aggressive they're going to be, that regardless of what they say, as long as there's some certainty in it, I think is good for the market. And maybe not for the stock market, but good for housing, just because I think it will help to put a bottom in or a top, if you will, in the direction of rates are going, some of that volatility.
so correct me if I'm wrong, but are they? They did say there will be at least 3 interest rate increases this year. Is that
Correct.
not true?
No, that they've said that. But if we go back historically speaking on what they said versus what they've done, doesn't always match up, right? So
Gotcha.
there are very smart people out there that believe that they could only do 2 because of different things that happen in the economy that might change that. And then you've got people like for example, Jamie Dimon. Jamie Dimon, you know, I don't even know what his position is at Chase, what he's actually called, but basically runs and operates, you know, Chase, came out last Friday and said that he expects that, you know, they'll do 7 to 8. Well, guess what happened then? The market just took a dump. Like, I mean, the bond market got hammered and rates dropped by like, you know, 0.5% or so. I mean, in one day, it was nuts. And just because there's uncertainty but that's just one person coming out with what they think is going to happen. And that's the problem, is that there's just so much mainstream media just with headlines saying certain things. And that's, until the market gets some certainty, it's, you know, it's everything is volatile. And so
Yeah.
I think they have to do something. And it's not a negative thing. They've got to get inflation under control, and they can do that by starting to raise the Fed funds rate. And also it gives them ammunition, right? If something does happen in the economy, like say we have another global crisis, at the moment they have no ammo, right? They're buying $125 billion in mortgage-backed securities and mortgage bonds or whatever, and our rates are at zero. Fed funds rates at zero. So they've got to taper. They've got to raise the Fed funds rate to give themselves something if we do get in another crisis position, to be able to financially, you know, help the economy again. And at the moment we don't have it. So these are all good things. It's just, it's not going to do to housing what I think a lot of people want to see it do to housing.
Absolutely. And I mean, if you're a buyer and interest rates go up and housing prices come down, it's just going to even out at the end of the day. So
No,
absolutely just depends on, you know, it's no easy answer. Let's see what some people are saying here. Living in San Diego, my friend Bern McGovern, it's asking if Jeb could be on our podcast. So Jeb, I'll have to hit you up on that.
When he says you have a podcast too? Is that a duo thing?
We do have a podcast.
All
it
right.
is directed towards agents on content marketing, attraction marketing. So we'll definitely chat about that.
No, for sure. I actually want to talk to you because I'm going the direction of podcast too.
Cool.
Just for content purposes, because I feel like not everybody wants to sit here and stare at us and listen to this. Some people want to get motivated and work out to listening to us. So I want to be able to provide that for them. You know,
you'll be the Joe Rogan of market data.
Too good. No, but I do have some questions, so we can chat about that, and I'm happy to do that for sure.
Sounds good. All right, Melissa. Yes, your first-time buyers. Yeah, just tough out there for first-time buyers. Looking into Riverside County. If that doesn't work, you're looking at relocating. Yeah, I'll know what your budget is. I have some clients looking out in Valley Center too. I mean, it's still in San Diego County, but some very good prices out there, especially for like new construction and things like that. Obviously, you have Temecula, but you know, people looking at Temecula as an option outside of San Diego, I think are always surprised at how high the prices are out there. It's not like you're going to be saving 30, 40%. You're saving 15% maybe.
This is a really good example, if you will. So some buyers came to us recently, and their budget's about $1 million. And this was prior to rates going up, and they were looking at Irvine, which is here in Orange County, and they might be able to find something in Irvine for $1 million attached. They were okay with that, but because the rates going up, they were affected pretty substantial, and their budget was going to be around $800,000 and what they could actually afford and want to keep their payment. And so we looked at Irvine and basically said, Irvine's not really an option at this point. So they were like, you know what, we're going to consider Temecula. So I just referred them to an agent in Temecula today, just because yesterday, because they can actually find something for $800,000 in Temecula. And the question was, do you want to deal with that drive? Are you okay with that? They're okay with it. So that's, you know, what people are doing is that, you know what, can't find it here. I still want to buy something. I'm willing to sacrifice a little bit to make it happen.
And again, once you get your foot in the door, if you're in a situation where you don't have a ton of money to go over appraisal, down payment, all these different things, get your foot in the door, build some equity. Then if the market keeps going the way it's going, you can have a tremendous amount of equity that you can utilize to get back into the market that you want to be in, or to get that next house that you're looking for.
No, agreed. I mean, we had a client. I didn't have a client. One of my lender that I used had a client last year, purchased 3.5% down, FHA. He was able to refinance in the same year and remove the PMI on the loan and get into a conventional loan.
Very nice.
in 1 year. So yeah, I mean, that's not normal, but
Yeah.
just shows you what's happening in the market.
Burn wants to know if buyers are having to waive all the contingencies in Orange County. What are you regularly waiving for your buyers?
I don't waive. I never waive home inspection, unless there's one provided to us and the buyer's okay accepting that. But never waive home inspection. I never. Typically, I will waive loan if my lender's doing the loan, just because I have some certainty and I know that I trust what he says and go in that direction. But usually, the only thing that I would say is more common is the appraisal, just depending on the situation. And even then, I'm doing analysis on the comparables, giving the buyers, hey, it's priced at $1 million. The last one sold at 950, but there's some other comps here around $1 million that could probably come in at appraisal, just to give them an idea of where it is. And if they want to go above that, saying, hey, listen, these comps support it. It might not come in. You've got to understand your risk here if you do decide to go this direction. And fortunately, I've been very lucky or fortunate in that I haven't really had any issues. So it's been pretty good.
Yeah, that's good. I think for us, appraisal, you almost always have to waive, like especially the way the market's going again. A couple of months ago, I was able to get offers accepted without doing it, but we're getting back into that phase where you basically need to waive. I mean, not in every scenario. Every scenario is going to be different, but waiving appraisals are pretty regular right now. I'm the same with inspections. I don't waive them unless we have one provided. The best is if they already were in escrow and another buyer had that inspection,
Exactly.
and you get a copy of that, because it's not just the sellers hiring their friend to give an inspection report. All right, my buddy Paul Wolfert, he agrees. Same situation here in Michigan for his buyers, helping a lot of people from California to Michigan because they're the ones who can afford it. Yeah, I mean, they're gonna change your market around so that was it Michigonians? Is that right? Is that a word?
I'm not
They're
sure.
going to be able to afford their own place
me.
anymore. All right. Hey, Dan, I'm local to Southern California. Want to reach out to get started on buying my first home. Thank you for your content. There we go. Awesome. Yeah, Anthony, reach out. My contact info is in the description below. I also have Jeb's channel in the description below. So definitely make sure to go check out Jeb's channel for all your market analysis needs across the country. I think that was pretty good. Any last thoughts you want to leave us on here, Jeb?
No, I mean, I'm one of those real estate agents that truly hopes that you see a slowdown in the market. I think it would be good for everybody. I think it's good for sellers. I think it's good for buyers. Less appreciation, more supply, giving buyers more options. Even within, I think a lot of people. I came into this year thinking that appreciation was probably going to be somewhere around 7-8% for the year. I think it's probably going to be double digits at the end of the year. And I do believe home prices are going to be higher around this time next year. So I think if you're a buyer and you have the opportunity to buy and it's the right time in your life, you have money in reserves, you have a longer term time horizon, it's a great time to own real estate. So
I agree.
And I'm looking myself. I'm not just saying that. I own property and I'm looking to purchase another property. So I'm not just, lip service. I'm actually putting my money where my mouth is.
Well, the great thing about YouTube is you do enough of these videos, you speak your truth, people start to understand that you aren't just an agent trying to get clients. You actually, you're interested in these topics. You're a genuine person. You care about other people. And I agree with you. I want the market I would like it to at least stay where it's at for a little while. So it doesn't keep going through the roof because prices are just getting crazy.
I'm still waiting for those people to realize that I'm not just a real estate agent looking to sell property.
I think you have what, 45,000 subscribers. At least half of them know that that's the case. So
I don't know about that, but maybe.
All right, Jeb, thanks for your time, man. Let's do it again.
Absolutely. All right, guys. Thanks.